My name is Astron. Today I will present about what is accounting. Accounting consists three basic activities. The first is identify, record, and communicate the economic event of organization to interest the user. The three activities in accounting I will show you in an illustration. In this illustration 1.1, the activity of the accounting process first is identification. First, accounting will select economic event such as transaction. Then, they will be recording, record, classify, and summarize. And the end of the activity is communication. Prepare all accounting report. The accounting process include the bookkeeping function. Okay, now I will make an assumption. Review question. Which of the following is not a step in the accounting process? As we know, the answer is C, economic entity. Who use accounting data? First, the user is internal user. Uh, there is a several internal user. First is finance, cash sufficient to pay, divide to SAP shareholders. Then marketing, what price for a Nokia cell phone will maximize the company net income. Then human resources, can we afford to give Toyota employee pay raise this year? Then management, which PepsiCo product line is the most profitable? Should any product lines are eliminated? Then we will discuss who use accounting data. Of course, it's external user. First is creditors. For the example, will a Singapore Airlines be able to pay its debts as they come due? Then investor, is Royal Dutch Shell earning satisfactory income? Then the last is investment. How does Disney get profitability? Okay, now we will have another question. Indicate indicate whether the following statements are true or false. First, the three steps in the accounting process are identification, recording, and communication. As we know, it's true. Then, bookkeeping encompasses all steps in accounting process. And the answer is false. Third, accounting prepare do not interpret financial report. And it is false. Then the third question, the two most common type of external user are investor and company officer. As we know, it's false. Manager, real accounting activity focus on report for internal user. And the answer is false. To building blocks of accounting, there's ethics in financial reporting, standard of conduct by which one action are judged as right or wrong, honest or dishonest, fair or not fair, are ethics. Recent financial scandals include Enron in USA, Parmalat in Italy, Satyam Computer Service in India, IAG, the insurance company in USA, and others. Effective financial reporting depends on sound ethical behavior. Then we will discuss more further for ethic in financial reporting. First, recognize an ethical situation and the ethical issue involved. Use your personal ethics to identify ethical solutions and issues. Some businesses and professional organizations provide written code of ethics for guide in some business situation. Second, identify and analyze the principal element in the situation. Identify the stakeholders, person or group who may be harmed and be benefit. Ask the question, what are the responsibility and obligation of the party involved? And the third is identify the alternative and weight of the impact each alternative on various stakeholders. Select the most ethical alternative. Considering all the sequences, sometimes there will be one right answer. Other situations involve more than one right solution. This situation require an evaluation of each and selection on the best alternative. Now we will discuss about ethic inside. I felt the pressure. Would you? I felt the pressure. That's what some of the employees of the now defunct law firm of Dewey and Leboeuf LLP USA indicate when they help to overstate revenue and use accounting trick to hide losses and cover up cash shortage. This employee worked for the former finance director and former chief financial officer, CFO, of the firm. Here are some of their comments. I was instructed by the CFO to create invoices knowing they would not be sent to client. When I create these invoices, I knew that it was inappropriate. Another example, what happened there is that a small group of lower level employees over a period of years carry out the instruction of their bosses. Their bosses, however, seem to have no concern, as evidenced by various emails with one another in which they referred to their financial manipulation as accounting trick, cookies to the book, and fake income. Now we will discuss about accounting standard. There is International Accounting Standard Board, IASB, and IFRS, International Financial Reporting Standard, and also there is a Financial Accounting Standard Board, generally accepted accounting principle. Now, how we measure a principle. First, there is a historical cost principle that indicates the company record asset of their costs. Then there is a fair value principle that states an asset and liability should be reported at a fair value, the price received to sell an asset or settle a liability. Okay, that's all my presentation. I hope you can enjoy it. Good night.